Crypto Market Outlook, week of October 20th to 26th, 2025. Hey everyone, welcome back to your weekly Crypto Market Outlook. We're coming off one of the most chaotic 2 weeks of the year, and heading into what could be one of the most important, CPI week. Let's unpack what happened, what's next, and where the smart money's moving, because this setup could define how we trade into November. Macro and market context, data fog, record flows, and fragile nerves. We're still in the middle of a macro data blackout. Because of the ongoing US government shutdown, most major releases have been delayed. The September CPI has officially been rescheduled to Friday, October 24th, at 8:30 a.m. Eastern, which means the market is flying blind, reacting to headlines instead of hard numbers. And that's dangerous. When traders can't anchor to fresh data, volatility spikes. Every policy leak, every tariff comment, every rumor about banking stress suddenly matters 10 times more. Last weekend's $19 billion liquidation event was proof of that. It started with a shock headline, a proposed 100% tariff on Chinese imports, which triggered panic across risk markets, and because crypto was trading in thin weekend liquidity, that panic turned into a cascade. Bitcoin flash crashed to around $104,800, Ethereum plunged near $3,400, and many altcoins fell between 40% and 70% before bouncing back. It was one of the biggest one-day deleveraging events in crypto history. Now fast forward to this week, and despite the carnage, something interesting is happening behind the scenes. Institutional money hasn't left. According to CoinShares, listed crypto ETFs, that's exchange-traded products, have seen 2 straight weeks of massive inflows. The first week of October saw a record $5.95 billion come in, $3.55 billion into Bitcoin, $1.48 billion into Ethereum, $706 million into Solana, and about $219 million into XRP. Then last week, even after the crash, crypto ETFs pulled in another $3.17 billion, with record weekly trading volumes hitting $53 billion, and a single-day volume of $15.3 billion on Friday. That's not retail money. That's institutional capital, and it's a reminder that the big players are still accumulating, even while retail is panicking. The only missing piece is macro clarity, and we'll get that with CPI on Friday. Until then, this market is headline-driven, liquidity is fragile, and traders are quick to fade any move that doesn't have real flow behind it. Technical analysis, levels, momentum, and structure. Let's start with Bitcoin. Bitcoin. After topping out around $125, $126K in early October, BTC broke down hard during the liquidation event and briefly hit the low $100Ks before bouncing. Now it's trading near the $115K, $117K range heading into the week. Here's how I'm mapping it. Immediate resistance, $117K, $120K, that's prior support turn supply. Above that, $123,000 and $125, $126K, the old all-time high zone. Support, $112K, $114K first, then the key shelf between $107,000 and $110,000, that's where dip buyers stepped in during the crash. Momentum-wise, RSI has cooled from overbought levels, and daily MACD is still positive but flattening. What you want to see now is a spot-led reclaim of $120,000 or higher. If it's just futures or perps leading the move, that's a fake out waiting to happen. A clean close above $120K, $123K flips the tape bullish again. Lose $107,000, and we're likely headed for a liquidity sweep down near $102,000 before finding new buyers. Ethereum ETH is still coiling inside its summer up channel, but it's running into resistance at the $4.85K, $4.95K zone. That's the same ceiling we've been talking about since August. The $4.3K, $4.5K range is your key support band, where the 20 and 50-day moving averages overlap. If we close under $4,200, that channel breaks, and we risk a bigger mean reversion. Technically, ETH looks stable but tired. It's consolidating, not collapsing, but it needs better flow to make a real push higher. Remember, ETH spot ETFs saw $796 million in outflows toward the end of September, their worst week since launch. That's a tactical overhang. Until those outflows stabilize or flip positive again, breakouts above $4,900 will be hard to sustain. XRP is basically stuck in the same range it's been in for weeks, between $2.80 and $3.10. Every time it approaches $3.10, $3.20, sellers step in and volume dries up. Support is sitting at $2.84, $2.90, with deeper demand around $2.70, $2.60. Momentum indicators are neutral, RSI mid-band, MACD flat. The structure's not broken, but it's not inspiring either. XRP needs a high volume breakout above $3.10, $3.20 with on balance volume rising to attract new money. Otherwise, it's just rotating sideways. Solana Sol continues to be one of the stronger majors. It's still printing higher lows, with solid buying near $1.95, $2.05. That's your defended shelf. The pivot zone is $2.25, $2.35, and the big breakout level remains $2.45, $2.50. If we get a daily close above that zone, it opens the door for $2.60, $2.80, but until BTC and ETH confirm, expect some chop. Institutional appetite for Solana is real. Remember, we saw a record $145 million single-day inflow into Solana ETPs in mid-September. That's your clue that big money is quietly accumulating. Across majors, RSI is mid-band, MACD is flattening, and 20-50-day moving averages are key reclaims to watch. This is the classic post-liquidation reset, energy building, waiting for direction. Fundamentals, why this market still matters. Let's cut through the noise. Bitcoin's fundamentals haven't changed. The ETF bid is real, the inflows are proof. We've seen $9 billion flow into crypto products in just 2 weeks. That's the kind of structural demand that doesn't vanish overnight. Short-term volatility is just leverage unwinding, not a broken narrative. Ethereum's case is still built on 3 pillars. Institutional access through ETFs and staking, tokenization and stablecoin settlement, and network activity that actually generates fees. The outflows we saw in September are tactical, traders shifting capital after a hot summer run. Once ETF flows normalize, ETH is still well positioned for a $5,000 breakout later this quarter. XRP remains in a unique position, full US legal clarity and now the ability for ETF issuers to fast-track listings under the new SEC generic standards. That's a big medium-term story. The only thing missing is volume. And Solana continues to act as the institutional alt. Treasuries are adding exposure, developer activity's high, and ETP demand is rising. Sol trades like high beta Bitcoin, it outperforms in uptrends, bleeds faster in corrections, but the bid is still there. Market sentiment, from panic to cautious optimism. Last weekend's liquidation scared everyone. We saw fear spikes, options skew flip negative, and social feeds full of crypto's done takes. Now, a week later, the tone's shifting from panic to curiosity. Traders aren't chasing dips, but they're watching for confirmation. Can Bitcoin reclaim $120,000? Will Ethereum's outflows reverse? Can Solana lead the next leg? Will XRP finally break $3.10? That's where sentiment is now, cautious, patient, and data dependent. Nobody wants to get caught offside before CPI hits on Friday. Actionable playbook: buy, sell, or wait. Bitcoin, BTC. Buy on confirmation. Daily close above $120K, $123K with spot volume target $125K, $130K. Wait, while we're range trading $112K, $120K, let ETF flows guide direction. Hedge or reduce, close below $107,000 opens a retest of $102, $105K liquidity. Ethereum. Buy dips, $4.3, $4.5K with quick reclaim of short-term MAs. Add-on breakout, close above $4.85, $4.95K target $5.2K, $5.5K if flows turn positive. Reduce, close below $4.2, $4.3K equals channel break. XRP. Buy only on proof. Volume led close above $3.10, $3.20 target $3.30, $3.50. Wait, while coiling between $2.84, $3.10. Cut, close below $2.70, $2.75 signals sellers back in control. Solana. Buy continuation. Close above $2.45, $2.50 unlocks $2.60, $2.80. Buy dips, $1.98, $2.05 only if majors are stable and spot leads. Step aside, sustained close below $1.95, $200 breaks trend structure. Altcoins and rotation. Keep speculative exposure under 5% until BTC holds above $120,000 and ETH above $4,900 for at least one session. Stick to liquid L1S, L2S, and DeFi projects with actual fee revenue, the assets institutions can buy when ETF flows turn risk on again. What could flip this outlook quickly? CPI surprise, October 24th. Hot CPI equals risk off, stronger USD, lower BTC. Soft CPI equals risk on, possible retest of $125K plus highs. Flow shock. Another $800 million ETH ETF outflow week or a surprise BTC outflow day equals range re-entrenchment. Policy headline risk. More tariff or banking headlines could trigger knee-jerk selling in thin books. This analysis is for informational and educational purposes only. It is not financial advice, and I am not a financial advisor. Crypto is volatile and can result in total loss. Always do your own research, manage risk carefully, and trade with a plan. And if you found this useful, hit like, subscribe, and turn on the bell, so you never miss your next crypto forecast.